Imagine waking up one morning and hearing that oil has reached $200 per barrel. At first, it might sound like a distant global headline, but within days, that number would start affecting your life in ways most people never expect. If you like understanding how global events quietly shape your finances, make sure you subscribe, because money, markets, and world events are more connected than most people realize. Oil is not just fuel for cars. It powers the entire global economy. Planes rely on it. Cargo ships rely on it. Factories rely on it. Farm equipment relies on it. Even plastics, fertilizers, and many everyday products come from oil. So when oil jumps from $80 to $200, the shock doesn't stay in energy markets. It spreads everywhere. Gas prices rise almost immediately. Transportation costs increase. Shipping companies raise their prices. And suddenly, the cost of moving goods around the world becomes dramatically more expensive. When that happens, businesses do what they always do. They pass the cost to consumers, which means the first place you feel the impact is in your daily expenses. When oil prices surge, something called cost-push inflation begins. It means the cost of producing and transporting goods increases. Think about groceries. Food has to travel from farms to warehouses and then to stores. Higher fuel costs mean higher transportation costs. And those costs show up on your grocery bill. Air travel becomes more expensive. Delivery services raise prices. Construction materials become more costly. Even electricity prices may rise in some regions. Slowly, everyday life becomes more expensive, but the impact doesn't stop with consumer prices. Financial markets react as well. Stock markets often become volatile when oil spikes sharply. Energy companies may benefit, but airlines, transportation companies, and manufacturing businesses struggle. Investors begin worrying about inflation returning. Central banks might delay lowering interest rates. Which means borrowing money becomes more expensive. Mortgages stay high. Car loans remain expensive. Credit card interest stays elevated. So suddenly, oil is not just affecting gas stations. It's affecting your borrowing power, your investments, and your cost of living. While rising oil prices create challenges, they also reveal something important. Global economic shocks reward people who understand how systems work. When energy costs surge, investors begin looking at energy companies, commodities, and inflation-protected assets. Governments may release oil reserves to stabilize markets. Energy companies may increase production, and markets slowly adjust. But for individuals, the most important lesson is awareness. When oil prices rise dramatically, it usually signals broader economic shifts. Inflation pressure, supply chain stress, financial market volatility. People who pay attention can prepare. They can reduce unnecessary spending. Strengthen savings. Avoid excessive debt. And position themselves for changing market conditions. Because in a world where global events move markets quickly, financial awareness becomes a powerful advantage. Oil may be just a commodity, but when its price moves dramatically, it becomes a signal about where the global economy may be heading, and understanding that signal can help you make smarter decisions about your money.